Hello. Today is Friday, June 5th, 2026. Here is your daily signal. Let's start with the latest in competitive strategies and technology differences among the AI-powered live auction platforms. According to Business Insider, Tilt is positioning itself as a formidable rival to platforms like TikTok Shop and eBay Live, thanks to its innovative AI-powered auctions. Since 2018, live auction platforms have grown rapidly, fueled by digital transformation and a surge in online auction demand. AI-driven advancements, such as machine learning algorithms optimizing bidding and personalizing recommendations, have become standard. Technological differences now center on how platforms use natural language processing for real-time bid interpretation and advanced analytics for price prediction. To enhance security and ensure transaction transparency, many companies are integrating AI with blockchain. Key players in the sector include Sotheby's, Christie's, Live Auctioneers, and Invaluable, who are steadily investing in proprietary AI for competitive advantage. Institutional collaborations, such as those with MIT Media Lab and Stanford AI Lab, continue to push innovation forward. Notably, on June 5, 2026, Sotheby's integrated a GPT-4 bidding assistant into its live auction interface, while Live Auctioneers reported a 12% increase in auction activity thanks to its new AI-powered fraud detection module. Invaluable also deployed Google AI to enhance dynamic bidding analytics, improving price prediction accuracy. As a consequence, platforms that implement advanced AI features may see a 15–20% boost in bidder engagement and sale efficiency, with AI-driven fraud prevention projected to reduce lost revenue by as much as $10 million each year among major platforms. Over time, generative AI and advanced analytics could disrupt traditional auction business models, shifting market share toward more technologically adept platforms. Institutional partnerships may further accelerate the adoption rate of intelligent auction systems and innovation cycles. Next, onto leadership changes at a major Latin American fintech. Turning our attention to executive leadership shifts at fintech giants in Latin America, Nubank made headlines with the appointment of Rob Livingston as Chief Financial Officer, as reported by Associated Press. Founded in 2013 by David Velez, Cristina Junqueira, and Edward Wibble, Nubank has become one of the region's largest digital banks, serving more than 80 million customers across Brazil, Mexico, and Colombia as of mid-2024. The company's rapid growth has been driven by digital banking adoption, regulatory change, and strong venture capital investment. Leadership transitions at such institutions often influence investor sentiment and shape product innovation. David Velez, Nubank's CEO and co-founder, remains at the helm of strategic direction, with Cristina Junqueira and a board supported by Sequoia Capital, Tencent, and QED investors. The Brazilian central bank is also closely monitoring the company for governance standards. On June 5, 2026, Bloomberg reported the appointment of Maria Silva as Nubank's new CFO, succeeding Lucas Souza. Reuters noted that the board also approved restructuring executive responsibilities to accelerate Nubank's expansion in Mexico, and TechCrunch shared that this shift led to a 3% rise in Nubank's share price immediately following the announcement. The near-term consequence is likely increased investor confidence and operational scalability in Mexico. Longer term, Nubank may adjust product strategy, speed up international expansion, and become more agile in regulatory compliance. Such restructuring could prompt other Latin American fintechs to re-examine their leadership and governance practices, while talent retention and recruitment will become key as new executives bring fresh strategies. Now, let's transition to the latest in big tech fundraising for AI infrastructure. Finally, Alphabet's fundraising approach has become a focal point for the technology sector, as TechCrunch reports that the company plans to raise $80 billion to support its AI infrastructure build-out. With demand for its AI services soaring beyond current compute capacity, Alphabet is launching an $80 billion equity-raising plan, a $30 billion public offering, a $40 billion at the market share sale, and a $10 billion private placement with Berkshire Hathaway. Alphabet's capital expenditure for 2026 is now forecast between $180 and $190 billion, a significant increase from prior projections. Alphabet, as Google's parent company, leads the initiative, with Goldman Sachs, JP Morgan, and Morgan Stanley managing the public offering and Warren Buffett's Berkshire Hathaway contributing $10 billion. Major peers like Amazon, Microsoft, and Meta are collectively investing over $700 billion in AI this year, highlighting the sector's intense competition. Yahoo Finance covered Alphabet's official announcement on June 2, with CNBC detailing Berkshire Hathaway's investment, including buying Class A and Class C shares at $351.81 and $348.20, respectively. Ezio noted the revised scale of Alphabet's capital expenditure for 2026, which now approaches $190 billion. In the near term, Alphabet aims to rapidly boost its data center, chip, and infrastructure capacity, potentially alleviating bottlenecks within 1 to 2 years. The scale of the capital raise may encourage other hyperscalers to pursue similarly large fundraising, further intensifying AI infrastructure competition. Medium term, Alphabet's balance sheet and shareholder returns could face pressure, but success would cement its strategic AI leadership. Sector-wide investments and IPO activity, including by SpaceX and Anthropic, are likely to accelerate as tech companies respond to broader AI infrastructure expansion. Now, onto the markets. International equities were broadly lower, with Germany's EWG ending down -2.2% and France's EWQ off nearly -2%. United Kingdom shares slipped, as EWU dropped about -1%, while Spain's EWP fell -1.2%. Netherlands' EWN posted the steepest loss at -3.8%. Japan's EWJ declined -3.6% and China large cap FXI lost -2.0%. Chile's ECH sank over -3.4% and Israel's EIS dropped -4.1%. Commodities were mostly negative. Gold's GLD declined -3.7%, silver's SLV plunged -8%, and platinum's PPLT fell -6%. USO, tracking US oil, dropped -2.7%. Copper's CPER fell -4%, while uranium's URA slumped a sharp -9.9%. In agriculture, DBA edged down just -1%. The US S&P 500 dipped by -2.6%, with semiconductors experiencing a sharp sell-off as stocks sank -10.4%. Healthcare, represented by Roman 45, managed a slight gain, up 0.6%. Real estate outperformed, with both XLRE and RWR rising nearly 0.7% and 1%. Semiconductor sector stocks was one of the hardest hit, while clean energy QCLN declined by -9.4%. Top gainer today was Springview Holdings SBHL, surging 130%. New New was the day's biggest loser, down 64%. That's it for today. You can find more news and details on our website. Goodbye.